Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, January 29th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. A couple of things I wanted to mention here. Number one, we're likely to remain inside the trading range for a little while here, heading into Wednesday's session, as we do have FOMC coming up, FOMC meeting, and the Fed interest rate decision. And that will likely lead to the next major move out of this range. So we could see more range-bound action heading into Wednesday's session. Having said that, we do have some big tech earnings this week, starting with Apple here after the close. We also have Facebook and Amazon coming up as well. So we could see quite a bit of movement heading into the first week of February. Again, very, very narrow range right here. You can see how narrow it is on the indicator down here on a multiple day range basis. That suggests we could have a pretty significant breakout soon. Everything continues to trend up, so again, until that is broken, the idea is that this thing continues to trend up. So as long as pullbacks are defended heading into, say, 2600 to 2620, that could be a great spot to look for a continuation toward 2800 heading into February's trading, especially with the higher value relationship that has developed. All right, let's take a look right here at the NQ. Again, FOMC coming up Wednesday, so we have more range-bound action that could be seen until then. Big tech earnings coming out, so that could influence price here as well. And overall, the trend remains up. So that suggests more uptrending behavior until proven otherwise. So until price fails to hold 6,600 and can't get back above it, this thing likely suggests more uptrending behavior here. But again, earnings could be a big deal if price, say, breaks down through 6,600 and can't get back above that zone. We're at a cycle high. Again, how much of a pullback do we see from that cycle high? So again, any weakness through 66 will be a big indication of potential selling pressure to come. All right, let's take a look now at crude oil. You'll see here that crude oil has also developed a very narrow trading range. This one right here over the last 12-13 sessions has become very, very narrow, and that suggests again that expansion could be seen coming up. The last time we saw that signal was here when we had that very narrow range after a drop, and that led to a big move down, then a big move back. And so again, you can see that this signal led to big volatility in the weeks that that came after. So again, that's exactly what we're looking for here. Very tight compression. We have a higher value relationship heading into February's trading. That would suggest that any pullback as deep as the 49s here could be a great buying opportunity for a shot higher. So volatility could be seen in both directions. So again, the first breakout could be a quick move followed by any rejection leading to the opposite move. So again, we'll keep an eye on crude oil here, but this one looks like it has some very, very good potential to see big breakout and high volatility movement in the weeks to come. Lastly, taking a look at gold futures. This one rallying, was up a little bit more here, just pulling back off the highs. But again, this was a buy candidate for us here recently, especially having tested the top of the pivot range, which was exactly 75.30. That's also now the low of the month so far, and a big rally off that low. Again, that's creating a higher value relationship for the upcoming month. And so far, this pivot range here has been an opportunity to defend. That could be the case heading into next month's trading as well. Any pullback, say as deep as 1296, could be bought for a continuation higher toward 1360, as that is the top of the key range here that we are shooting for with this current move. So again, while we've had great movement to the upside, we could still see more pullbacks, and any pullback could still be a buying opportunity for a continuation toward 1360. As long as 1260 remains intact now, we've gone high enough here that 1260 really needs to remain intact for this continuation to occur. But again, a continuation toward 1360 could be seen ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.